Hi guys, welcome back to Founders Talk. This is From Idea to Asset, turning innovation into fundraising power. Every startup begins with an idea, but investors don't fund ideas, they fund assets. Two founders can walk into the same investor's office with equally brilliant concepts. One walks out with the term sheet, the other walks out with advice. The difference? Ownership. The first founder can prove they own their innovation, the second one can't. Today, I want to show you how to take what you're building and turn it into something investors recognize as value, not just creativity. Because when your idea becomes an asset, it becomes leverage, and leverage gets funded. First, let's talk about what investors actually value. Let's start by looking at this from the investor side. Investors look for three things in early stage deals: team, market, and defensibility. Team and market get all the attention. Everyone says, we've got a great team and the market is huge. But defensibility, that's the one that gets overlooked. And that's where the patents live. Defensibility means, can someone else copy you tomorrow and crush you with scale or capital? When you can answer no, not because of secrecy, but because of legal protection, that's when you stand out. So, your patent is proof that you own the moat around your business. Here's what's funny. Investors don't need to read your patent. They just need to know you have one. Patent pending says, we're not just smart, we're strategic. All right, guys, let's talk a little bit about why IP is the value multiplier. Think of your company like real estate. Your technology is the house, your patent is the deed. Without the deed, you might still live there, but someone else could come along and claim the property. With the deed, it's yours. It's defensible, transferable, and valuable. That's how investors think about IP. It's not just paperwork. It's proof of ownership. And when you're raising capital, that ownership shows up in your valuation. Studies show that startups with even one pending patent raise more, faster, and on better terms. Because a patent doesn't just say you have an idea, it says you have a barrier. Here's an example. A founder in clean tech once told me, we didn't have revenue, we didn't have customers, but we had a patent. And that was enough for investors to see us as a company, not just a project. When your idea becomes an asset, it transforms from something fragile into something fundable. All right, guys, I want to talk to you about how patents build investor confidence. Investors don't just write checks for cool tech. They write checks for confidence. And confidence comes from three signals. 1, preparation. 2, protection. And 3, potential. First, preparation. You've done your homework. You know the landscape, the prior art, and your filing is strategic, not random. 2, protection. You've taken steps to prevent copycats. Investors don't have to worry about your idea being stolen the minute it hits the market. And 3, potential. Your patent portfolio grows as your company grows. Investors see the path to more assets, not just more features. And when they see those three signals, their risk perception drops. And when the risk goes down, valuation goes up. Here's a story. A medtech founder I knew was pitching for $1 million. She had no sales, but she had 2 provisional patent applications and a clear roadmap of how those patents would expand. The investor told her afterwards, your IP strategy was the reason we wrote the check. That's how powerful it is when your intellectual property tells a story. All right, guys, let's talk a little bit about preparing your IP for due diligence. Let's talk about what happens when an investor actually decides to move forward. Congratulations. That's when they perform due diligence. This is a deep dive into your company's assets. Here's what they look for in your IP. First, who owns it? Is it under a company name or is it still listed under an individual? Second, are the inventors properly assigned and documented? Are there co-owners, any partners or universities with rights? Fourth, are the filings active, expired, or provisional? And fifth, does your patent actually cover what your product does today? If those questions lead to confusion, investors get nervous. I've seen deals stall for weeks over something as small as a missing assignment form. So keep your documentation clean, your ownership clean, and your filings current. Remember, investors don't just buy into your product, they buy into your paperwork. The cleaner your IP file, the faster they'll move to closing. All right, guys, I want to talk to you a little bit about the fundraising power of patent pending. I want you to think about the phrase patent pending for a second. It's short, it's simple, but psychologically, it's powerful. It tells investors three things instantly. First, this founder is proactive. They're not just waiting until it's too late. Second, the technology is unique, worth protecting. Third, this company has something competitors don't. And for a few $1,000s, that small phrase can literally shift the tone of a meeting. Here's an example. I worked with the founder developing smart logistics sensors, and they were nervous about pitching, worried investors would think they were too early. They filed a quick provisional, and suddenly they weren't just a concept anymore, they were patent pending. The investor feedback changed overnight. Instead of asking, who else can do this, they started asking, how soon can we scale this? See, investors equate patent pending with seriousness. It's like a startup's version of having a trademark suit or a land title. It says, we're not guessing, we're claiming. All right, guys, I want to talk to you a little bit about using IP as leverage in negotiation. Now let's talk about leverage, because that's where your patent truly shines. When you own your innovation, you control the terms of engagement. If an investor knows your product is defensible, that no one else can easily duplicate it, you're negotiating from strength. You can justify a higher valuation, keep more equity, and choose better partners. And beyond fundraising, patents also give you options. First, you can license them. You can use them as collateral, or you can spin them off into joint ventures. In fact, some startups raise early capital because of their IP, despite being pre-revenue. Short story. A founder I advised in AI filed one patent covering their core algorithm. A larger company wanted to use that technology and ended up offering a licensing deal that covered their burn for a full year before they'd even launched their product. Their IP gave them leverage to negotiate from confidence and not desperation. That's the difference between saying we need funding to survive and we're offering access to something exclusive. That's power. All right, guys, I want to talk to you a little bit about building IP into your pitch story. So, how do you actually bring this thing into your pitch? Because you don't want to drown investors in legal jargon. You want to tell a story. Here's a simple 4-step narrative you can build into your deck. First, the problem slide. Show the pain. Be clear about what's broken in the world. Second, the solution slide. Show your product, but speak in outcomes. For example, we built a system that reduces time by 60%. Third, moat or traction slides. This is where your IP comes in. Example, we filed a provisional patent that protects our process for adaptive signal processing, creative, a defensive moat in a growing market. Fourth, use a fund slide. Tie part of your raise to expanding your IP. 10% of this round will go towards finalizing and broadening our patent filings globally. That tells investors you understand IP, not just as protection, but as growth investment. And remember, patents don't just belong at the end of your pitch as fine print. They belong in your story as proof of foresight. All right, guys, I want to talk to you a little bit about common mistakes that founders make. Let's run through common mistakes that derail startups during fundraising. First, unassigned IP. Founders forget to assign the patent to the company, leaving it under personal ownership. Always file assignment documents early. Second, expired provisionals. You get 12 months to convert a provisional into a non-provisional. If you miss it, that priority date, your first mover advantage disappears. Third, overly broad claims. Trying to patent everything makes your filings weak and expensive. Stay focused on your core innovation. Fourth, overconfidence. Some founders assume we have a patent means we're untouchable. It doesn't. Patents are strategic tools, not magic shields. The founders who handle IP best are the ones who stay humble, informed, and proactive. All right, guys, I want to talk to you a little bit about action plan, turning your IP into fundraising power. If you're serious about raising capital, here's your action checklist. First, audit what's unique. Identify your true technical advantage, the thing that competitors can't easily replicate. Second, file the provisional. Even one simple filing establishes ownership and credibility. Third, clean up your assignments. Make sure every inventor's rights are assigned to the company. Fourth, integrate your IP into your pitch. Don't bury it. Feature it as a competitive moat. Fifth, build IP into your growth plan. Expand your filings with every funding round. Do this, and you're no longer pitching a product, you're pitching an asset class. All right, guys, in closing, let's close with one simple truth. Every startup starts with an idea, but not every startup owns its idea. Second, patents don't usually make your company valuable just because they exist. They make your company valuable because they prove ownership. So, before your next investor meeting, ask yourself, is my idea just an idea or is it an asset? Because when you make that shift, when you treat your innovation like property, not inspiration, your whole fundraising story changes. Ideas get attention. Assets get funded. Turn yours into one.